A 0.5% tax on the gross turnover of petroleum marketing firms proposed by Nigeria's government has raised the red flags for many in the country's petroleum industry. The tax continues to generate controversy as many Nigerians are still facing a prolonged fuel crisis across the country. Groups such as the Depot and Petroleum Products Marketers Association of Nigeria believe that the implementation of the new tax will lead to the closure of businesses involved in petroleum products distribution. It is Nigeria's Finance Act 2020 that says marketers have to pay 0.5% from their gross turnover by the end of this year. Joining me is Taiwo, Oyedele, Fiscal Policy Partner and Africa Tax Leader at PwC. Taiwo, welcome to Business Edge. Thank you once again for joining me.
Thank you, Tolu.
We've had a lot of conversations about this particular Finance Act, the amendments that the president signed late last year to, of course, have them kick off. But on paper, should there really be an issue in particular with having companies pay a certain amount of their gross turnover in the year to the federal government? What makes this tax a problem for those in the industries?
Thank you very much. Just by way of some background and explanation, so this tax is not applicable only to petroleum product marketing companies. It actually is a tax that's applicable to all companies in Nigeria, excluding agricultural companies, companies involved in agribusiness, and any company that is a new company within the first 4 years of operation. And lastly, a small company whose turnover is less than 25 million. So once you take out these three sets of companies, the tax is actually applicable to any other company operating in Nigeria, whether it's in the petroleum marketing product sector, whether it's in financial services, including manufacturing. So what does it mean actually? So this has been in the law for almost as long as we've had the income tax in Nigeria, which has been many decades. And it's a law that was introduced many years back on the basis that, one, government needs money to run the economy. So if you have too many companies not making profits and therefore not able to pay tax, maybe government will have challenges. Number two assumption is that some companies cannot be trusted because they find ways of manipulating their accounting profits and therefore they do not declare taxable profits on which to pay taxes, yet they continue to operate in business. So maybe we'll find a way to tax them anyways. So this is how the minimum tax was introduced many years ago. Over time, I have to say that it has evolved and it has gotten better. It's a law we shouldn't have. I personally think that it's very punitive because when a company has no profit on which to pay tax, that is not the time you need to impose a compulsory tax on them by all means. Most cases, it is the time that they need support from government so they do not collapse. What government has done by way of reforms over the past few years was, number one, the basis for calculating that tax used to include your capital, used to include your assets. They've removed all of that and limited it only to turnover, which is why we now have 0.5% of turnover as minimum tax. In the past 2 years, because of COVID-19 and because of a lot of advocacy, government said, well, instead of 0.5%, we'll reduce it to 0.25%. That is cutting that minimum tax in half. So you only pay half of what you should have paid before. But that concession now is coming to an end, which means everybody will go back to 0.5%. And that is why the petroleum marketing companies are particularly concerned because their products are regulated. What that means is their margins are very slim. In fact, we did a study for them about 2-3 years ago, and we realized that for many of them, their net margin was even less than this 0.5%, which means they will never be able to make profit that they can keep for themselves and their investors. In fact, over time, what we expect will happen is they keep paying that tax out of their capital, and in no time they'll be out of business.
So it's interesting because expanding this conversation, one, the initial idea was to focus on petroleum marketing companies because of the current scarcity that Nigerians are experiencing as of now. It seems to be going down, but there is still a scarcity. So there's still a situation where petroleum products pre-MS are not making it to Nigerians as they would. But when you expand it further and you look at all the companies who fall under this, with a few exceptions, the next question you have to ask is Nigeria going about this conversation or the attempts to increase taxation differently? Are we going about it the right way? Because there are some exemptions that you might believe companies in the downstream or upstream sector of the oil industry would be able to get away from. Maybe not being in business 4 years, not having a certain amount of turnover at the end of the year. Are those exemptions not enough to give some breathing room? Are we going about the conversation around taxation, particularly of businesses, the right way in Nigeria?
We certainly need to do much better. We have made progress over the past few years, such as if you think about the exemptions that we now have for small businesses, we didn't used to have that. If you think about the exemption of minimum wage from personal income tax, we didn't used to have that. So I have to admit that we have made some progress, but not enough. And there's something I always say about a government has to be clear with their fiscal policy that when they impose taxes, they're not imposing it on seed, but on fruit. Any tax that will make you pay out of your capital is certainly not an optimal way of collecting taxes, and it's clearly not sustainable. So what you find in this case to the petroleum marketing companies is that because their product prices are regulated, although we have the exceptions now, or should I call it, I think I used to call it exceptions where, between government and the marketers, we don't know, but we're not buying at the regulated price. But on a normal day, and we hope that we get back to that normalcy very quickly, is that they cannot decide how much to sell their products. Government decides for them. And then when they also, and the same government sells the products to them as well, and they have their overhead and other expenses to cover. And what that means is they can't really make a lot of profit to be able to accommodate this minimum tax. When government says it doesn't matter what happens to you, even if you had made losses, I need you to pay this minimum amount of tax. That's where the problem is. You shouldn't have to force any business to pay taxes out of their capital, or maybe to the extent of having to go and borrow so they can pay government. That is not sustainable, and I think this is something that government needs to look at very critically. We have to review that law. We have to do away with the minimum tax, because today the tax authorities have far more intelligence within the ecosystem to be able to determine whether a company is manipulating their record or whether indeed they are making losses. So it shouldn't be that we are not sure of what companies are doing and therefore just treat everybody as a criminal. It is not the right way to go. And in many countries where they have something similar to this, in some countries they'll call it alternative income tax. What they do is to ask you to then pay a certain amount in a particular year so we can continue to fund government, and subsequently you get this as a credit, so you are not really out of pocket. But in Nigeria, you pay this minimum tax, and the provision of the law says even if you have allowances, such as capital allowances is a technical term for when you buy assets, this law says those have to be utilized, which means you lose the value of your assets and you still pay a minimum tax and you never get the credit back subsequently. It's just too punitive, and we shouldn't be doing that in 2022.
So I want to pick up on the points, which was also what members of DAPMAN, which is the Depot and Petroleum Product Marketers Association of Nigeria, has said, that the Finance Act is focusing way too much on the aspect of a huge turnover. And in fact, it doesn't actually take into cognizance the margins that some of these companies are making in what they do. So he talked about, one of the representatives talked about the fact that they're making the same amounts they were making when fuel was being sold at 40 naira per liter as they're making now when the price is anywhere from 160 naira to 200 naira per liter. So if we were to look at this particular provision in the Finance Act in terms of this conversation between turnover, profits, and margin, where should we be on the side of history in terms of being on the right side of things? How do we look at it?
Yeah, no, I think it's a very valid point. You have a number of businesses where turnover, you have very large and huge turnover, but you rely on very thin margins. So you make your money from doing more volumes. So if the turnover has increased over the year, but over the years, but the profit hasn't increased, and government says, I'm going to tax you based on your turnover, it is not good for that business. It's not good for that sector, and by extension, it's not good for all of us. If these companies are able to pass their prices and their taxes as cost to their consumers, all of us will have to bear the brunt of these taxes by way of paying more at the pump. And therefore, you see the impact on transportation and by extension on the cost of living and inflation as well. Unfortunately for them, they can't pass on the cost, so they're having to bear it, but they're simply just screaming to say, but we have no capacity to even bear this tax. And if nothing is done about it, we'll then be out of business, which again would be a disaster for the economy if you don't have these companies operating. Just the past few days in places like Lagos, when you don't have the extent of supply of this product, we're all bearing the brunt. Even when you have the fuel, you spend hours in traffic. So trying to, because people are queuing and blocking the road, trying to get fuel. We shouldn't be doing that in this time and age. So what government needs to do is to design the tax system properly using a lot of intelligence and data to tax companies based on their profits as provided in the law. In fact, many people, including myself, argue that this tax is unconstitutional. Unconstitutional because the Constitution says a company should pay company's income tax on its profits. So when you now tax me on when I have no profit, you're actually going against the Constitution. And in fact, there was a decided case by the court somewhere in East Africa, alluding to the point I just made now. So maybe some of us will have to challenge government if this advocacy for them to do the right thing doesn't work over the next maybe 1 or 2 years.
So I want to go back to expanding the conversation around the consequences of a tax such as this. As you said, for us with petroleum marketers, we're going to see possibly an increase. We're already seeing an increase in the price of the pump price of petrol and an increase in the cost of transportation. But when you widen the scope to all the kinds of companies, Taiwo, that are falling under this tax. It's the petroleum marketers now that are making noise because end of the year is coming. But there are a whole host of companies that are also going to fall under this same hammer. What are we going to see specifically? What do you think Nigerians should brace up for as this tax comes into being? Basically, it's just a few weeks now before these companies have to turn over. And what are the consequences for these companies if they fail to remit that money? What does the law say? What does the act say in terms of the consequences and what could potentially happen into 2023?
Yeah, the provisions are the same provisions for, not paying your corporate income tax. So the law allows the tax authority, which is the FRS in this case, to impose penalties and interest. And if after a while you're unable to pay, the government can actually apply the force of the law to close down your business and sell your business and recover their taxes from whatever proceed they're able to make and then return whatever is left to the shareholders. But we really hope we don't get there because that would be unbelievable. And that's not what we want at this time when Nigeria needs all the investment that we can garner, whether it's international or domestic. Also reminding everyone about the high level of unemployment, and these are the companies that are supposed to create the employment, and also reminding everyone about the multidimensional poverty, and these are the companies that are supposed to help us create prosperity with government facilitating and creating the right environment. So you don't want to also imagine what the manufacturers are going through. This tax also affects them as well. The same companies that are having to deal with excise duties, they're having to pay VAT, and the economic situations are not even any better than they were during the COVID-19 period. If anything, I think it's worse now, and the whole world is actually concerned about going into a recession. So if there's any time that businesses need the support from government that they can get, all the support they can get, I think this is the time. It is not the time to force businesses to pay a minimum tax to government, which can then lead to them either not being able to operate at full capacity, cutting back on employment, affecting their value chain, sometimes all the way from farmers to suppliers of services to the end users of their products, as well as the fact that you don't want to complicate the already difficult and dire situation in which we find ourselves, affecting everyone, not least those companies to pay the taxes that government is asking for.
So, Taiwo, my final question has to be the fact that Nigeria finds itself between the devil and the deep blue sea. According to some estimates, more than $3.3 billion has been lost to oil theft since last year. And while other oil producers were able to make windfall from the high prices we haven't seen in quite some time, Nigeria was unable to do that and unable to meet production quota. We also have a situation where finally debt servicing costs overtook our revenue generation. And while we can understand that this is not the time to ask for citizens to do more, Nigeria is in a position where it simply doesn't have any more money. In all honesty, many people might even say Nigeria is broke. And we also expect that subsidy costs may even exceed $6 trillion or 6 trillion, I beg your pardon, in 2023. So when you look at that, you see the pressing need that the government has to somehow bring in more money. And taxation is a low-hanging fruit. Is there an approach that government can take to the conversation around taxation that doesn't end up inflicting more damage and poverty on the people, but takes into cognizance the very dire economic situation the country finds itself in?
Yeah, that is correct, Tolu. Nigeria, no doubt, is in a dire situation, and the financial position of the government is not looking good. So if you say government is broke, I would agree with you 100%. If you say government is in debt crisis, revenue crisis, all of that will be spot on. But the issue is that while we all acknowledge that government needs money, we're not all convinced that government is doing enough as to doing the hard work. The easy work is to amend the law and ask someone to pay tax, right? The hard work you need to do is to think about structural issues. Why is it that you have all manners of agencies? You have 63 MDAs, government-owned enterprises. You have FRS, Customs Service, NIPOs, all manner of agencies collecting taxes. Many of these they cannot properly account for, particularly the MDAs. So you have government inefficiency in how they spend money. And there was the report about NAPIMS, which is a subsidiary of NNPC, spending 90 billion last year on public relations. And you're asking yourself, why they spend? That's more than the amount we collected for 3 taxes: stamp duties, capital gains tax, and one other tax in that year, right? And there's also the thing about this subsidy itself that is taking 6 trillion naira. Is that really what we are consuming? Between the NNPC and Customs Service, they don't even agree on the volume of consumption. How about the oil theft? Is it the fault of a business in Nigeria that they're stealing our oil? Is it not government to control that? So you control oil theft, you reduce the corruption in fuel subsidy, you harmonize government agencies in terms of revenue collection, and you can easily double Nigeria's tax collection in less than 1 year, guaranteed. So if you are not doing that, and you also find people in government sometimes living flamboyantly as if nothing has changed, those things don't give the confidence and they don't inspire you to want to make the extra sacrifice, even when you know that your country needs all the help that we can get. So I think government has to lead from the front and lead by example, including setting the right tone. And then when we need to make sacrifices as individuals and businesses, it will be an easier conversation to have.
All right, Ty, we'll leave it there for now. We know there's a number of layers to this tax conversation, and we always appreciate the fact that you give us time to get into it. Thank you so much.
Thank you.
And it is a conversation that doesn't end, particularly as Nigerians across major cities like Lagos and Abuja continue to feel the impact of a lingering fuel scarcity. Now, starting the conversation, 0.5% gross turnover. And we have depot and petroleum marketers saying that it will push many of them out of business if they must hand over that money at the end of the year. But the money isn't just for them. It's also for companies, all companies across Nigeria. What does it mean, and who is going to end up paying for this tax in the long run?